So we're back. This is one of the last classes talking about CEO compensation. Why do you guess the relationship between the board of director advisors and the CEO is strange and impacts the stocks and details like that, or the prices, or the CEO compensation? Arthur, do you have any guess? No? Have you guys ever heard of a inside board member, outside board member, arm's length board member, gray area board member, family related board member? You're supposed to have board members that are inside your industry. That all makes sense, right? They should not be connected to you. They should not be family members. They should be experts in your industry in order to be able to give you expert advice on the company, right? That almost never happens. Was it Vincent that was giving us our expert advice on Elon Musk and Tesla? Tesla is a car company. Any idea on his board of director advisors? He has, I believe, 15 experts that are giving him advice on his salary, things like that. Any idea how many of those 15 people are experts? Maybe let's first define what is an expert that should be at the level of Elon Musk. What is the expert? How many years of work do you need in the automotive industry to be called an expert? Julie, what would you say? How many years do you have to work in automotive to be considered a real expert in automotive industry?
Maybe 10 years.
Okay, let's take that then. Any idea how many of the board of director advisors for Tesla have worked in automotive business or anything connected to cars for close to 10 years? Any guess? Laura, you're the finance whiz.
I don't know. It depends. It depends how they came there.
Right.
Maybe they just studied a long time, or maybe they just have experience because a lot of other jobs.
Oh, okay. So my question's pretty clear. Tesla is one of the most famous car companies in the world. Most people are investing in it like crazy. They're making it one of the most expensive companies in the world. And all of that is decided by generally 15 people. 15 people control, supposedly, the CEO. So in this car company, of those 15 people that are controlling those details, how many of them follow Julie's advice and have 10 years of automotive experience? What would you guess?
I think they don't have experience in automobile. Like
why? Okay, why would you say that? It's one of the fastest growing companies, and it's one of the most expensive companies almost in the world. Would you not agree that if you were managing a company, you would want experts to give you advice, right? So
yeah,
why would you say but?
Like the board, for me, the board is not about the car, it's about the financial things. So like I think they know, but not 10 years of just automobile. Like there are to be, an experience about everything. Like they are, I don't know how to say, like...
They are giving advice about the growth of an automotive company. Right?
Yeah.
So how much experience do they have to give reasonable advice about an automotive company? You said none. I think that's
not none. Just not many. Like, of course there are some experience because it's obvious, but I mean, like...
Oh, it's obvious. Okay, this is getting interesting.
No. Yes, it's obvious because if you manage something about car, you should know some stuff about car. But I think it's not.
I was excited when you were telling me that I'm full of shit, and you were telling Julie she's. I was excited.
No. I mean,
because you were correct. Now, when you're being reasonable, you're wrong.
Okay.
Can you explain that, Gregoire? Can you try to explain it? Guess?
That when you're reasonable, you're wrong?
Yeah, this is what,
No,
no, this is what I have to explain.
of the 15 people that were board of director advisors in Tesla, most of the time, none of them had more than 10, none of them had close to 10 years automotive experience. Of those 15, only one had any automotive experience at all. And that was just working for like a low-level job in Toyota in Australia and it wasn't 10 years. Any idea who it might be then? So the details of the PPT that we have now and the details of whatever we've taught for the semester, I'm trying to get you to look at the big picture so that you understand how management is going on around you, especially Laura and Eloise, how finance is going on around you. Usually there's tricky things going on. Why? Who are those people that are giving Elon Musk how much money, Vincent?
Something like 50 billion.
$56 billion. Yes, just in the last few months, right? So it's not $56 million, $56 billion. Who are those people? Julie, you're smiling for half a second. You're the finance whiz, right? Managing money. Who could you invite to tell the world you deserve $56 billion if you could ever do that?
Can I try?
Yes, go ahead.
It's maybe people you like or people you trust or people you get along with because they are deciding how much you pay. So this can be people like from your surrounding.
People, strangers around you. Can you be more specific?
Not stranger, like, but just people from your surrounding, like people you know from several years, maybe.
Okay, let's play the game. Who could you possibly think of might be useful to help you grow a car company, number one? And then number two, who could you ask to give you a salary or a pay compensation of $56 billion? Anybody on the planet, right? Most people on the planet would never even think of that. So who could possibly do that?
Like a family?
Right. Any idea if Elon Musk has any family member on his board?
Probably his wife.
His brother.
His brother. His brother, yes, he has been on the board for a while. Any idea what his brother's experience is? Vincent, you should know. Elon Musk's brother, what's he known for?
I don't know at all.
Running a restaurant. and now he's the advisor, he's the board of director advisor to Tesla. Any idea how much he's getting paid to get this, to give this great advice?
Zero.
That would be good. Some of these guys do it for zero. That are experts in the industry. They want to help the industry grow. They really want to make the industry and the company a better place. Yes, but those are very rare. In Tesla's case, I believe they're getting more than $300,000 every year salary compensation, plus something like 160,000 shares of Tesla each year. And what is the price of Tesla? Yeah, exactly. It's that much. So just know when you are investing in companies, things like that happen. And so you definitely have to, Hyunak Do, you're trying to be a specialist in human resource management. Were you aware of these details? Are you aware what are the best boards? How are the best boards? What do, like the scientists, what do they say? HR expert, how is the best board supposed to be designed? You're obviously, for example, you're not supposed to have family members. They're supposed to, that's called at an arm's length. People are supposed to be more than one arm's length transaction away. They're not supposed to be connected to you. What else?
I think for Tesla, the board, how do you call that board?
Board of directors?
Board of directors are all connected to Elon Musk.
Now they are, because Elon Musk is paying them lots and lots of money every year to give advice. And basically they meet 4 times a year. Every quarter of the year, they have a company meeting. And during that meeting, these advisors tell the company or tell Elon Musk what he should be doing. Or basically they take votes and they chat about what should be going on. It's not just restaurant managers, although we respect restaurant managers, Elon Musk's brother. Anybody know who Larry Ellison is? Zarnigar, you were talking about wanting to be working with big information and data analytics. Almost all of you, if you are interested in big business, you should be aware of SAP and Oracle. Those companies control the information of all big companies. Well, one of the biggest companies is called Oracle, and the CEO of Oracle, that has been the CEO since its start, many decades long ago, Larry Ellison. So what that means is Larry Ellison controls like a giant Excel file that Samsung uses, that controls all of Samsung's stock prices and people's pay and salary and the suppliers' costs and the customers' details. So all of the information about Samsung, the suppliers, the workers, the production details, the customers, the sales, all of that information, of course, it's super top secret, is controlled in like a giant Excel file, like called the MIS or ERP systems. And those are controlled mostly by Larry Ellison in Oracle. He is a board of director advisor to Elon Musk, and some of the staff that have been working for Larry Ellison is also a board of director advisor. Basically, some people were joking, Larry Ellison's girlfriend in that company is now also a board of director advisor for Elon Musk. And so be aware of things like that. I'm not sure if it's true or not. Some things might change over time, but those type of details you might want to know. We should be back. Is Jake Revere, are you ready to start giving your presentation before I talk too much?
Good afternoon, everyone. I am Abdullah Jawahir, and today I will present about the CEO compensation in USA, especially why CEOs make so much money. Table of contents. Next slide, please. So the CEO compensation or executive compensation is composed of both financial compensation, executive pay, and other non-financial benefits received by the executive from their employing firm in return for their service. It's typically a mixture of fixed salary, variable performance-based bonuses, for example, cash, shares, or call options on the company stock, and benefits and other ideally configured to take account government regulations, tax law, desires of the organization and executive. Since 1970, rapidly accelerating CEO pay has exacerbated inequality in the United States. High CEO pay generates pay increases for other high-level managers, while pay at middle and the bottom of wage distribution continues to depress. increases CEO pay is not actually linked to an increase in the value of CEO's work. Instead, it's more likely to reflect CEOs close to ties with the corporate board members who set their pay. While corporate boards technically report to shareholders, shareholders are not particularly well positioned to put pressure on directors to restrain CEO pay. And why it matters. CEO pay is not just a symbolic issue. Exorbitant CEO pay is a major contributor to rising inequalities that we could safely do away with. CEOs are getting more because of their power to set pay, not because they are increasing productivity or possess specific high demand skills. This escalation of CEO compensation and of the executive compensation more generally has fueled the growth of top 1% and top 0.1% incomes, leaving less of the fruits of economic growth for ordinary workers and widening the gap between very high earners at the bottom 90%. The economy would suffer no harm if CEOs were paid less or taxed more. Next slide, please. These are listed there. There are 10 highest paid executives in 2019 and ranked according to Bloomberg Pay Index. Bloomberg's analysis includes salaries, bonuses, and equity awards that are value each company's fiscal year end. Recurring grants or options are counted in the year they are best owed, and one-time grants mean to compensate an executive for several years are allocated over the as in fillings. Chief CEOs of the larger firms in the US earn far more today than they did in mid 1990s, and many times what they earned in 1960s or late 1960s, they are also earn far more than in typical worker. And their pay, which relies heavily on stock-related compensation, has grown much more rapidly than typical worker pay. Importantly, rising CEO pay does not reflect rising value of skills, but rather CEOs' use of their power to set their own pay. And this is growing earning power at the top has been driving the growth of inequality in the US. Over the last several decades, inflation-adjusted CEO compensation increased from $1.5 billion in 1978 to over $60 million in 2014, or the 907% a rise, almost double stock the market growth. Over the same period, a typical worker's wages grew very little. The annual compensation adjusted for inflation of the average private sector production and non-supervisory worker, comprising 82% of total payroll and employment, was from 48,000 in 1978 to just $53,000 in 2004, an increase of only 12%, 10.9% due to this unequal growth. Average top CEOs now make over 300 times what typical workers earn. So these are the listed on the top highest paid CEOs in 2019 and ranked Bloomberg Pay Index. First, the Elon Musk, CEO of Tesla, with the total of compensation 598 million. Elon Musk's name at the top of the list. His electric car manufacturer Tesla Incorporation posted a 1 billion loss in 2008, and Musk has never wanted a salary. He is paid minimum wage to abide by the law, but he doesn't cash the checks. And the second, as Tim Cook, a big boost to Tim Cook came in the form of an equity grant from 10 years ago in 2012. And coming to number 7, Intel CEO Robert Swan. Intel Swan earned almost 100 million in 2019. This amount includes his salary, stock awards, perks, option awards, and bonus. The Alphabet Incorporated CEO Sundar Pichai, otherwise known as Google Alphabet Inc. Incorporated Pichai earned almost 90 million in 2019. His stock awards were in the amount of 80 million and made up bulk of his full compensation for the year. The Microsoft Corporation CEO Satya Nadella, rounding up the list of tech giants. Nadella earned more than $70 million. The chief executive officer of Ingram took the final spot on the top 10 list. His earnings totaled more than $70 million in 2019. Next slide, please. These are the most common types of compensations that CEOs get. First one is, firstly, the executive employees such as chief executive officers, chief financial officers, company presidents, and other upper-level managers are often compensated differently than those at the lower levels of organization. Executive compensation consists of base salary, bonuses, long-term incentives, benefits, and perquisites. In addition to understanding the components of executive compensation, there are issues of pay equity and ethics associated with pay for the base salary or executives. Base salary is the regular annual salary of the executive, while job evaluation is typically used to employee pay in organizations. Executive base salary levels are often more influenced by the opinion of the compensation committee, which is often dependent on information from salary surveys of similar companies. Typically, pay CEOs and other executives set to be competitive with the other executive salaries in the market, thus may be very high in comparison to pay of employees in their own company. And next one is executive bonuses. In the base, the salary executives most receive variable pay compensations that fluctuates according to some level of performance. One very popular type of variable pay is the executive bonus, which is a one-time payment tied to some short-term performance goal. The bonus may be based on any number of performance outcomes ranging from judgments of executives' performance by the board of directors to levels of company profits of market share. The last and most popular type is the long-term incentives. In recent years, incentives have become important for rewarding the performance of executives and now make up about 1/2 of total executive compensation. Incentives are rewards that are linked to specific long-term goals of the organization. The most common long-term incentive is the stock option, which either gives the executive free company stock or allows him or her to purchase a company stock at a reduced price for a period of time. These stocks become more valuable as the company improves financially, and therefore ownership of stock is intended to encourage the executive to make organization more profitable. Executives can then sell these stocks at a later time when they have appreciated in the value, therefore providing compensation beyond the employees' tenure with the organization. Recent news stories detailing companies' failures in which unethical accounting practices and artificial inflation of stock prices caused lower-level employees to lose investments in company stock have raised concerns about the ethics of granting the large number of stock options to executives. Next slide, please. There is a relationship between CEO compensation and the stock market. The exploding use of stock options to compensate executives has increased CEO pay significantly. CEO pay has historically been closely associated with the health of the stock market. Also, this connection loosened over the last few years when CEO compensation did not correspond to rapid stock price growth. The generally tight link between stock price and CEO compensation indicates that CEO pay is not being established by a market for talent, as pay surged with the overall rise in profits and stocks, not with the better performance and CEO's particular firm relative to that firm's competitors. The figure shows the CEO compensation measured using realized stock options historically fluctuated in tandem with the stock market as measured by the S&P 500 index, confirming that the CEOs tend to cash in their own options when the stock price are high and accumulate unexercised options. When stock prices are low, the financial crisis of 2018 and the accompanying stock market tumble knocked CEO compensation based on realized stock options down almost 44% from 2007 to 2009. By 2014, the stock market had recouped all of the ground lost in the downturn. Not surprisingly, CEO compensation based on realized stock options also made a strong recovery. The close connection between stock market growth and CEO compensation has loosened a bit in the years since 2014. As seen in the figure, CEO compensation based on realized stock options has not followed the sharp upward trajectory of the stock market. Next slide, please. From now on, I will talk about buybacks, how the buybacks are important compensation for CEOs, and then how are the US companies avoiding billions in taxes by using buybacks. So the efforts boards of the directors to increase shareholder value often include buying back company stock. A stock buyback or buyback is the purchase by a company of its own stock, either on the open market or directly from its shareholders. Buyback is also known as share buyback or stock repurchase. Similar to dividend, buyback is a way to return capital to shareholders, while a dividend is effectively a cash bonus amounting to a percentage of a shareholder's total stock value. However, a buyback requires the shareholders to surrender stock to the company to receive cash. Those shares are then taken off the market thus having a similar effect of returning capital to shareholders. Buybacks are a relatively new concept and were uncommon before 1982. In fact, they were illegal throughout most of the 20th century because buybacks were considered a form of stock market manipulation. In 2018, more companies than ever are buying buyback stocks. The increase in buyback has been fueled by the Tax Cuts and Jobs Act passed on December in the US, which substantially lowered the corporate income tax rate, as well as the repo to be brought back to the United States. The effect of buyback on executive incentive program will depend on a variety of factors and is specific to each company and its unique incentive programs. Next slide, please. Now I will talk about the pros and cons of buybacks. Among many positive aspects of buybacks is that they increase stock price and thus shareholder value. First, buybacks increase shareholder value. Often, a company will use a buyback to support, in most cases, increase the price of its shares when it believes they have become undervalued. The undervalued stock is bought back at the lower price, sometimes sending a signal to investors that the stock will appreciate in value. The amount of appreciation ranges between the initial bump in the stock price caused by the buyback and any further increase resulting from in the market reaction to that initial bump. Secondly, it returns cash to shareholders. Buybacks are used to provide current shareholders with a cash distribution, and this is viewed as bonus by many investors. An investor can sell stock either to the company or into the open market, where the buyback creates a strong demand. Thirdly, it provide consistent shareholder returns. Buyback provides more consistent returns to the shareholders than do special cash or stock dividends, which only benefit current shareholders. This allows buybacks to complement dividend rates, boosting shareholder returns without an increase in a stable dividend rate. And then it reduces aggregate cash dividends. Buybacks provide a way for companies to reduce their cash outflow without having to cut their dividends. And then next pro is the increased earnings per share, also known as EPS. Removing some shares from the marketplace means annual earnings will be distributed among fewer shares, and each share will be entitled to a greater portion of the earnings. The reduction of shares is somewhat counteracted by the interest earned on the cash used by buyback. And then sixth, it boosts capital efficiency measures. Buybacks can increase financial ratios used to calculate capital efficiency measures such as return on equity, return on assets, or return on invested capital. Capital structure plays a large role in how companies optimize opportunities and provide cash for growth and operations. A major factor of capital structure is the debt to equity ratio. When a company initiates a buyback, it effectively changes its capital structure because fewer outstanding shares equates to less outstanding equity. This change in structure has the benefit of increasing companies' capital efficiency measures simply because its generated returns are now linked to a lower level of equity assets and invested capital. And then it increases market liquidity. Buybacks, sometimes large shareholders or sellers of a specific stock are looking to liquefy their holdings, and the issuer may offer to buy back their shares. And lastly, offset dilution. A buyback will offset dilution from the issuance of shares aspect of long-term incentive, also known as LTI program. And then there are also cons. Buybacks may increase the executive compensation levels regardless of the success of the company. This is particularly true after the recent reduction in corporate income taxes. A key connection between buybacks and executive pay is EPS. Buybacks will reduce the number of shares outstanding, thereby increasing the earnings per share. EPS is a key benchmark for an executive's performance-based pay, particularly in LTI programs. In addition to EPS, buybacks also affect other parts of financial statements. Another issue related to executive compensation is that a buyback generally occurs during an LTI awards performance period, and there is no corresponding adjustments to the performance goals to the offset the effect of the buyback. So it can be said that a buyback gives executives a head start in achieving their performance goals. So this is the end of my presentation. Thank you for listening.
Thanks. Any comments? I'd like to get you guys to comment on these details. For example, for everyone here, regardless of if you are interested in doing the paper or the exam, you must know one detail, and that's referencing. So I would like to hear some comments from you guys about the referencing here before it's taken off the screen. Other than
Professor, I sent the other file. This is the not finished presentation. I had a
okay.
very little time.
Regardless of your presentation, I'm just using this as a learning experience. So thank you very much for your presentation. Thank you very much for the presentation with the referencing you have. I want to use that as a learning experience. So, Hyunakdo, what can you comment about this? What could be an exam question?
As an exam question? Actually, I do have a comment, but I don't know how to think of that as a kind of exam question. But thank you for your presentation first. I really appreciate it. But actually, I cannot see that. I mean, your reference format is quite wrong. Since
yeah.
see the name of the author and the date. And yeah, such as things just like that. And that's
how about be specific? Hyunakdo, please be specific. What is needed for exam marks? Not this presentation, just exam marks. What could be a question? What could be exam marks? What are proper referencing requires? What is required in proper referencing?
In this, I mean, way of referencing?
In any referencing. When you reference, what are you supposed to be trying to do? And in our class all semester, we have used APA with DOI. So what does that require? What are you supposed to show?
Maybe since we get some information from references, So if you want to know more detail, then can we just go inside to that?
What are the components that are supposed to be in a reference? Hanakdo.
The name of the author,
Okay,
date,
that's 1 point. Yes.
date,
That's
and
2.
the
Yes.
name of that article,
Good.
and what was that? I mean, like it was
Same thing. Last class, we missed it also. I forget who was talking about it, but somebody last class missed this. Maybe it was Arthur or Vincent. They were trying to say it, but they said it with different words. And you are missing it too. Arthur or Vincent, can you guys help?
Is it
Name of journal.
Right, the name of the journal. And then after the name of the journal or name of the magazine or the name of the company, whatever it is, what is next that you're supposed to show?
the DOI?
You can show the DOI or the website. And a small detail that's not really important for some people, but they also say when you got it. Did you get this? Some of the references from
Scopus,
Ugluk Beck's
probably.
presentation, not Scopus. Scopus is not important for this at all. If you show Scopus, I'm happy, but most of the world don't know what Scopus is. Only geeky professors or scientists might know what Scopus or Web of Science is. You should be aware that is the best of the best quality. Thanks for that, Vincent. What about inside his slides? Not on the last page. Good, right there. Arthur, what is supposed to be shown here?
It should also be like the same kind of references, sorry, not only a link, but a good style of reference with title, author name, page.
No. Usually that's not required, because if you do that and you're presenting a lot of information, your slides are going to be filled up with too much referencing crap. So in order to keep things professional, short and sweet and concise, you keep all the reference material to the end, except what on this slide? What should you show? Generally, there's only 2 things you're supposed to show on this slide about your reference. Julie, do you know?
No. Family name of the author and the year.
Right, the year of the author and the year that the author wrote it, not the year that you read it. So thank you very much for that. Any other comments? We didn't hear about gender pay. We heard about CEO pay. Thank you very much for that, Ugluk Beck, and your presentation was good. Jacob Veer, it was a good presentation. Any comments about other details?
Professor, sorry for my accent. My accent is very harsh that maybe people didn't understand.
No problem for me. I like the accent. Thanks.
Yeah, I also understand it really nicely. I have a question,
Thank you.
if it's okay. I wanted to know more about difference between shareholders and board members when they're deciding the CEO pay, or just basic difference between shareholders and board members. He mentioned that I wanted to know more, if it's okay by Jawahar.
Shareholders and what did you say?
The board members when they're deciding the CEO pay, or if you want, you can just go with the basic difference between shareholders and board members.
Could you repeat the question, please? The differences between shareholders and
the board members.
Okay, Shareholders
Oh, sorry.
don't
s-
don't get pay. Shareholders are just anybody that invests, and then when you give them their money, they give you some share. Some companies might give you dividends, but shareholders don't get paid. There's a difference when you are sometimes a lucky executive. The company only determined by those executives in the management, they will give you pay and compensation with shares. Sometimes they will pay you with shares, because if they just pay you with cash, you'll have crazy high taxes. And so one way to lower your taxes and to sort of cheat the government is to just give you a nice cash compensation, but then they will also give you extra compensation with shares. Some companies, many companies, the shares might be worth $50, and they could give you 100 shares, and that's $50 times $100. So you can get a lot of money that way. Some companies the shares are worth $300,000 each share. So it gets very big. Does that clarify the details? Not really? Is it still confused?
Yeah, no, yeah, sure. Thank you.
Any other questions? We didn't hear too much about the gender pay and the gender differences, but I'm going to thank you very much for that, Jacob.
Thank you, Professor.
I am showing you an article, a summary of a literature review. This is from MIT Sloan School of Management. They're talking about the Journal of Financial Economics, Corporate Governance, CEO Compensation, Firm Performance. It's a presentation of this paper that we developed a while ago. And the main thing that you want to see is the conclusions. When the corporate board of directors, that means the corporate governance, when that is weak, when they don't really know what they're doing, when they aren't really well experienced, that when you don't have a lot of experience, for example, in the automotive industry, the CEO is able to get much higher compensation. That has been known for many decades. Since the 1980s, 1990s, we knew about that. And so Elon Musk, when he nominated his corporate governors or board of director advisors, because they were weak and not experts in that area, it was easy for him to get this crazy high compensation. Another thing, the CEO compensation is higher when the CEO is the board chair. And for a long time, Elon Musk was the board chair of Tesla. And when it's larger, do you guys remember how big is a normal board of directors? Remember what I told you guys when I started today's class?
15.
No, Tesla is 15. Normally it's 7 or 8. Sometimes it can be up to 14. Tesla is actually crazy big. 15 is bigger than average, far bigger than average. And so it's another example. When the board is bigger or larger than average, that's when the compensation gets higher. And so these are all, Elon Musk must have read this and used this as a rule book to create his company. Next, there's a greater percentage of board composed of outside directors, and the outside directors are appointed by the CEO that are gray directors. Basically what this means is they have connections to him, special connections to him. So because for some reason, some people say Elon Musk has special connections to an island of Hawaii, and that island is owned by Larry Ellison and that other executive in Oracle that Larry Ellison owns. There's some sort of special personal relationship there. That is considered a gray area. Obviously, Elon Musk's brother being a governor or board of director advisor, that is huge, like a gray area. Next. Outside directors are older and they serve on more than 3 other boards. When you get directors that are just for show and they're working on many different companies, supposedly giving advice, but because they're working on many, they can't really focus in depth on any, then the CEO can get away with a higher, a bigger compensation. And again, Larry Ellison and some of the board of director advisors that they have are already on many other boards. Again, these are all just rules not to follow that Elon Musk was following. He was doing the opposite of what Steve Jobs did. Anybody know of what was the story of the board of directors and the pay or the relationship with Steve Jobs and his board of director advisors? Nobody? Emma, are you aware of Steve Jobs and his relationship with the board of directors?
Aware? What is aware?
Steve Jobs and Apple?
Yeah, I know. But
Have you haven't heard of any special relationship that Steve Jobs had with his board?
it was bad. Yeah, I know, but
Okay,
he
so
didn't have a good relationship with his
okay, what can you be more specific?
I don't remember specific why, because he was too strict, like rude, like his behavior was not very.
That usually doesn't impact the board too much. Being a son of a bitch is not good. From the Monday to Friday, from 9 to 5, those workers have to be with you every day. Those people, it sucks. But the board of directors, they only meet 4 meetings a year. It's those meetings when they talk about how we're going to manage the corporation, how the corporation should grow going forward. It's just a short 1 or 2 hour meeting, and then they're finished. If somebody's nasty, I don't worry because I'm paid more than $300,000. Go ahead, you can call me all the names you want for $300,000. Elodie, do you know what was the relationship with Steve Jobs and his board of director advisors? He did what I think, was it Emma?
He not fire all the people on the board?
Well, first, when he started his company, Apple, he tried to get the best possible people to be advisors. And he actually surprisingly got the best experts in the industry to give advice to the Apple company. Well, the problem was they weren't friends of his. The problem was they were real experts. They were real business people. And when he started to grow, Steve Jobs is a freak, right? He's a strange guy. He had strange, different personality and visions and characters and views of how to do business and run things. Well, everybody else was just a regular, hardcore business person, and they thought his way was not a good business way. So they fired him. They were regular business people. They thought he was doing business the bad way. They fired the CEO. So that could be possible. That is the rule. That's why you hire your friends. That's why you hire people with special relationships so they won't fire you. And Elon Musk did that. His brother is on the board. Larry Ellison has a very good relationship with them, these other people, and they're paid $300,000 a year directly from the CEO. That would stop. The CEO can fire you anytime they want. That type of thing Steve Jobs didn't take care of. Next, the relationship between the board and the ownership structures and the level of the CEO compensation. The CEO compensation is decreasing function of the CEO's ownership stake. Usually, do you understand what that means? The more the CEO owns, the less compensation they usually have. For example,
what is stake? I don't have it.
Stake, the owner's ownership. The owner has, the owner gets. So what the owner puts in their pocket. So the CEO's compensation, his monthly paycheck goes down if he owns a lot of the company. The more of the company he owns, the smaller his paycheck. Is that clear? Vincent, you just
Yeah,
asked.
yeah, it's clear, it's clear. Thank you very much.
Okay, but a lot of people confuse that. They are thinking the compensation is just salary. So if we say the salary, that's true. For compensation, it's not always true. So the CEO's ownership, the more they own, the smaller the salary. But maybe the compensation is bigger. For Elon Musk, the compensation is bigger, but the salary is smaller. A lot of people in business confuse that. What does that mean? Fahim Malik, what does that mean when salary can be small, but compensation can be big?
I don't know, but
Okay, well, thanks for the honesty. Compensation is everything that's given to the person. It can be your monthly cash, or it can be housing, or it can be an office allowance, or a credit card, or a cell phone, an expense account, a jet to fly, and it can be stock or shares. They won't give it to you. So all of those things can be combined into compensation. Usually, the smartest people have small salary with cash payment every month, because that's the only thing simple people notice. Simple people will look at the cash people get. For example, my cash, how much I'm actually paid, is very different than the cash I get every month, because my taxes, almost half of my money is disappearing in taxes and teacher funds. And so if you are paid in stock, it's a huge advantage. Does that make sense? Some people, who is it? USB and some of those big investment banking companies, they have spent like $50,000 on a desk, or $50,000 on an office rug, $50,000 on just a special chair. That's part of their compensation. And sometimes they can have, what else, Arthur, what else could you think could be in a compensation package? What would you want if you're super lucky?
I think basically what you say to
Okay,
have mobile phone.
What else?
Yeah.
Yep.
Uh,
What else did I forget to name?
from things I know, mobile phone, an apartment maybe.
Those are popular. What about the bankers, the big bankers? You guys know McKinsey consulting firms or
credit cards.
Sure. Many times, even small people like me, I was given credit cards for things. But what about the big bankers and the big finance companies? Laura and Eloise, those big managers and directors.
They get bonuses.
Like, yes, good. Those are part of the compensation. Anything else?
Or I don't know anymore.
Eloise, you want to get in the
car?
finance business? So what was it? A bar, a car? Yes. Did you say a ar?
Yeah, a car. A company car.
Yes, company cars. Good.
Maybe some trips.
Trip like yes. Actually, that's good. I will help explain that to you. Even Yonsei University, some universities, they own resorts in Jeju-do, like the Korean Hawaii, and they own other hotel companies around the country. And so when you travel to those parts of the country, some professors can stay there for big discount or for free. Sometimes company executives can get free travel, free flights, or free train trips, or free bus tickets. Yes. And what else?
Some technologies, office technologies, maybe.
For sure. Such
can
as?
be incentive, Professor.
Absolutely. Many different incentives are part of the compensation package. Yes. Bonuses, we already said bonus. Yes. What type of technologies, or what are some of the other creative things? So far, you've talked about traditional, normal things. I would
Health
like you.
insurance.
Absolutely. Health insurance, that's standard. Everybody should get that. Yes.
And sometimes if you give the after
Housing.
restaurants, they can pay you the restaurants sometime.
I didn't understand what you just said. Could you say that again?
Like when you go to restaurant, like with some customer, they pay the restaurants.
Oh, yes. Right. Yes. Many
Like the
companies.
company card.
Yeah, company card kind of thing.
Yeah, they will give you a company card to pick up the customer, things like that. They will give you a credit card to take the customer to dinner or lunch. Yes, sometimes, especially in Asia, they will give you a credit card. You have to buy small gifts and give the small gifts to the customer before coming. What is the problem with that? If you're working for McKinsey Consulting, that is an American company, or even what's the big French Carrefour? It's an international retail company like Walmart. Those have executives and they give you credit cards. In Korea and China and Japan, usually you have to give gifts to people. What's the problem with that? For example, sometimes you have to be aware of the laws.
Because there are
For
no
example,
taxes on it, no?
that too, but sometimes you can go to jail in France or go to jail in the United States or Canada if you use the company money to give something to a customer. That is
Yeah,
basically called bribery. The other thing, since I believe our class time is almost up, right? The other thing that some companies do is they will give you free tuition, or they will pay for school, or they will pay for massage classes, massage treatments. They will pay for tax consulting or financial consulting, financial planning so that you can retire. Some of those things are quite popular. You might want to be aware of them. And even small things like health insurance. Somebody said health insurance. I quickly said, of course, but I want you to make sure that you understand. Even Yonsei University and Keimyung University, the health insurance is different. Yonsei University is a higher ranked university, and the compensation is usually much higher and much better, but the health compensation here is better. I pay almost nothing for health insurance with the Keimyung University, but at Yonsei, you did have to pay. So when you take a job, it helps to know those things before you actually accept the job. And usually the only thing for a young person that they care about is just the monthly cash they pay you. So if you know the monthly cash is the focus, and that's kind of strict, all of those other things, if you start asking what is possible, almost everything else, it's usually easier to give you. So be aware of those other compensation opportunities, because you can get those better and easier, and usually they make your life much, much happier.